Good afternoon, everyone, and welcome to the IOSCO Asia Pacific Hub's webinar on financial inclusion in capital markets, regulatory design, and implementation considerations. My name is Eileen. I am the head of operations from the Hub, and I will be both your host and moderator today. On behalf of the IOSCO Asia Pacific Hub, I would like to thank all participants from joining us from all around the world. We're particularly pleased to see a strong interest in today's session, with more than 300 registrations from over 58 jurisdictions, and the vast majority are from emerging markets. Financial inclusion is increasingly becoming an important consideration for securities regulators. While much of the broader discussion often focuses on banking and payments, today's webinar looks specifically at capital markets. As regulators seek to broaden participation in capital markets, a number of practical questions arise, such as, how should inclusion objectives be reflected in regulatory frameworks? What role then should regulators play in facilitating access? And how do we expand participation while maintaining investor protection and market integrity? And ultimately, how then is success measured? Today's discussion is particularly timely given the work of IOSCO's Growth and Emerging Markets Committee, the GEMC, on its work from the Financial Inclusion Working Group and the publication of its internal note on financial inclusion and fintech initiatives in emerging markets. I am therefore delighted to welcome our speakers from the IOSCO General Secretariat, IOSCO's Financial Inclusion Working Group Chair, CMB Turkey, SC Malaysia, FRA Egypt, and the Financial Innovation for Impact at the Cambridge Centre of Alternative Finance. Without further ado, I would like to invite Josafat De Luna from the IOSCO Secretariat to deliver his introductory remarks. Josafat, over to you.
Thank you very much, Eileen. Let me start by welcome all the participants on behalf of the IOSCO Secretariat to this important webinar. I also want to thank the IOSCO Asia Pacific Hub for putting together this very important webinar. And as you can see, let me put it on the full mode. The topic on market development is a priority for IOSCO, but also for the growth and emerging markets. Actually, if we recall from the IOSCO bylaws, members have resolved, among other things, to exchange experiences in order to assist the development of the markets of the members. Also, the Growth and Emerging Markets Committee has taken capital market development in general as a key priority. And very recently, one of the focus was on fintech. The GMC produced a report on that. On top of that report on innovation facilitators in emerging markets, the GMC decided to continue the work on financial inclusion. This is a very important approach because probably this is the first time that IOSCO approaches the topic from the capital markets perspective. I agree with Eileen that normally for the banking sector, the discussion has been low for quite a long time, but this is very recent for capital markets. However, the topic is also relevant from a regional perspective. And just to put a couple of examples, in the Africa Middle East Regional Committee, they have put together a working group on market development. And one of the priorities that they have identified in the region has to do with financial inclusion. And of course, in the Inter-American Regional Committee, they are also discussing how to support market development, including by financial inclusion strategies. So it's very important to see that at the level of the growth and emerging markets, a recent work was conducted with 44 emerging markets from all around the world participating in this exercise. And what we can see is that financial inclusion is a priority for capital market authorities. They have either a financial inclusion specific mandate or indirectly they try to promote financial inclusion initiatives through financial education or through the capital market development mandate that they have, or through other regulatory objectives. But definitely, one way or another, financial inclusion is on the agenda of the emerging markets. The report, which I will strongly encourage you to read, presents different key takeaways. I would like just to emphasize three of them. The first key takeaway is that market development and financial inclusion require to take care of investor protection, market integrity, and address the reduction of systemic risk. Because any new initiative based on technology could promise many benefits, but we should take care also of the risks, or the potential risk at least. Then the regulation should have a proportionate approach. This is something we share with other approaches taken in the banking sector. And finally, collaboration is key, because financial inclusion is not only the work that capital market regulators could do on their own. They need to collaborate with other authorities, but also with the industry and the general public. So I am very pleased to have this group of distinguished panelists with us today. And with that, I will stop here, just sharing again my congratulations for the IOSCO Asia Pacific Hub for putting together this important webinar. Thank you.
Thank you, Josaphat. As mentioned earlier, IOSCO's Financial Inclusion Working Group has been examining how emerging markets are approaching financial inclusion and fintech-related initiatives. To help set the scene for today's discussion, we're pleased to have with us Tariq Ibrahim, Chair of IOSCO's Financial Inclusion Working Group, who will share some observations from emerging markets from their work as well. Tariq, over to you.
Thank you, everybody. Welcome. I'm very glad to be part of this endeavor and effort. I also see that Josaphat has been a great help. I want to do a shout out for him as we were going through this endeavor that started towards the end of 2024 to put in together a survey, and within under a year, try to get a flavor of what are the different jurisdictions doing when it comes to financial inclusion, and how does it relate to the overall strategies and overall mandates and things like that. So I guess I was going to talk a little bit. I wasn't sure that what Josaphat was going to cover, but he did cover the 8 takeaways that came out of the survey. And I think the report may be available, and strongly suggest that you guys try to spend some time looking at it. But it's very important to understand that the flavor of the participation, not only from a geographical distribution, but we also looked at it from multiple dimensions. One of these dimensions was the level of maturity of the emerging country. Of course, IOSCO adopted 4 levels for the growth in emerging markets, from the early nascent, developing nascent, and the mid-level emerging, and the borderline developed. And the participation from understanding the answers and analyzing the survey question was important to understand where they come from. The other thing is also the fact that, which also Eileen alluded to originally, what was the responsibility of the jurisdiction when it comes to what are they focusing on regulating. So with almost 50% of the respondents were securities focused, only a regulator. The other 50% was mixed, with 20% doing everything, banking, non-banking, as well as securities, and 30% roughly doing non-banking as well as securities, which includes some non-bank lending and insurance, of course. So understanding the dimension of what the jurisdiction is responsible for also helps us understand the different coloring and initiatives and drivers and enablers of financial inclusion. And of course, one of the other aspects that we found to be helpful is the population size of the country and its geographical distribution, because it did impact help us understand some of the results as we were doing the survey as well. So one of the key takeaways that I would like to refer to is, I'm going to share quickly. This was the distribution of the respondents. As you see, while we had an even distribution geographically, but the majority of the respondents were from the developing nation. And we also found that this fourth dimension was very important. It's the fact that we had almost 50% focus on security, 20% integrated non-bank, and 30% did everything. And financial inclusion within each profile differed. And this was one of the things that we needed to take into consideration. The bottom line here is the diversity of the successful approaches. We found in Europe mandate-free innovation. In Africa, there was a lot of focus on the resource mobilization. Asia Pac with the focus more on the technology leadership, and the Middle East targeted excellence in some of the regulations. So there is no single path to success, but there are many common elements, and it's worthwhile looking at all the different flavors and trying to see what approach and what's the strategy depending on where you come from. This is the final slide for my opening. I found this to be very clearly defining of the relationship between financial inclusion as a strategy. Let me just get a pointer here. So financial inclusion, we found it to be driven primarily by either market development efforts or social and political national objectives, specifically in the large populous jurisdictions. And we found that the key enablers of financial inclusions includes financial literacy, which does include as well consumer awareness, consumer protection and fairness mechanisms and approaches, initiatives. They all support the financial inclusion. And of course, fintech or the digital transformation in general supports all of these efforts. It supports the ability to have successful financial inclusion, and it directly supports financial literacy, consumer protection, as well as market development directly. So this is a very important finding that we wanted to conclude, and we actually in Egypt also are taking into consideration as it's helping us put the financial inclusion strategy with understanding that at the strategy level is driven by market development and social and political objectives, while as at a operational level, it is enabled by the digital transformation, financial literacy, consumer protection initiatives. Thank you very much.
Thank you, Tariq. I think your remarks have highlighted, well, jurisdictions share similar objectives. They are often approaching financial inclusion through different regulatory, institutional, and market contexts. And I found the emphasis of the different regions very interesting. So we move on to our next session, session 2, that looks at cross-jurisdiction observations to practical implementation experiences. We will hear perspectives from three securities regulators, the CMB Turkey on facilitating access while preserving investor protection and market integrity, SC Malaysia on translating policy objectives to implementation, and the FRA Egypt on strategy, ecosystem coordination, and measurement. So together, we hope these perspectives provide a useful illustration on how financial inclusion can be approached through different regulatory lenses. Our first speaker is Ms. Gul Ertan Ilal, Senior Expert at the Capital Markets Board of Turkey. Gul will share Turkey's experience in facilitating broader access to capital markets while preserving investor protection and market integrity, including the role of disclosure, information access, and investor education. Gul, over to you.
Thank you very much. Good afternoon or good morning to everyone online. It's wonderful to see so many of you joining this webinar, and thanks to the IOSCO Asia Pacific Hub for this wonderful organization. I will just share my slides with you. I think you're able to see the slides, okay? So it's already been mentioned that when financial inclusion is spoken about, it's usually about the ability of individuals to access the financial system, whether or not they have a bank account, a credit card, if they can access payment systems, because this is the foundation for individuals to be able to participate in economic activity and to invest their savings. Investors accessing capital markets are, in that respect, they are already significantly financially included, actually. But securities markets entail many different complexities on issues such as the ability to assess information and risks and vulnerabilities to fraudulent activities. As an emerging market securities regulator, the core mandate of the Capital Markets Board of Turkey includes the development of capital markets in a secure, transparent, efficient, stable, fair, and competitive environment. And this should ideally result in efficiently channeling savings to investment in the real economy to attain economic growth and development. However, due to these complexities that I've mentioned, we cannot aim for inclusion without any conditions, and investor protection concerns constitute another part of our core mandate. Therefore, the approach that we have adopted has been to impose possible measures for investor protection while empowering investors with adequate knowledge and training on financial markets and instruments. And against this background, I will speak briefly about the regulations on investor protection in Turkey, and I will follow with some practices on facilitating access to information, on investor education, and I will conclude with some of my own considerations on the issue. So, with respect to investor protection, I should mention that the Turkish capital markets regulation was reformed with the enactment of the Capital Markets Law in 2012, and this was followed by new secondary regulations in 2013 and 14. I'm saying this because this reform had EU alignment as a major goal. So our investor protection measures usually follow the Markets and Financial Instruments Directive of the EU. Accordingly, when opening an account with an investment firm, there's the requirement to conclude a framework contract, and the minimum requirements for this contract are determined by the CMB. Also, the Know Your Customer requirements must be completed, and a general risk disclosure form must be presented to the clients to make them aware of the risks of investing in securities markets. Now, this part, the client identification, Know Your Customer, and contract concluding part was also enabled to be conducted remotely as of 2022 in order to facilitate access a little bit more. After this stage, we also have investor classification. Investors such as investment funds, financial institutions are classified automatically as professional clients. But also legal entities and individuals that exceed certain thresholds for net worth or trading volume can be classified as professional clients upon their request. And all other clients are classified as general or retail clients. Retail clients are subject to transaction limits, both in terms of transaction size and the instruments they can invest in. And they are subjected to a suitability test when receiving portfolio management and investment advice, and an appropriateness test when products are marketed to retail clients, to ensure that the client understands the structure and the risks of the products that they will be receiving. This test does not have to be performed for least risky and most liquid assets such as government bonds and investment fund assets. So this is the investor protection measures in a nutshell. Of course, sound investment decisions always depend on having adequate and timely information. Therefore, we've tried to enable equal and free access to financial market information for all stakeholders. And for this purpose, we use a few online platforms. The first of these is the public disclosure platform, where all public disclosures by issuers, capital market instruments, and market operators are published. And the platform is operated by the Central Securities Depository, and it provides updates on most recent disclosures and enables searches by corporation, company type, sector, disclosure type, or period. I will attempt to do a quick demonstration of this. I hope you can see it. Yeah, okay, thank you. So this is the website. And so this just shows the most recent disclosures, but you can also search by type of disclosure, financial statement or material event, or you can search according to company types. Let's say Borsa Istanbul companies. And once you've done that, you can narrow your search for companies included in a specific index or sectors where they operate. Here we have like manufacturing. And you can reach the information on any company. Here you have the articles of association, valuation report, sustainability report, all kinds of reporting can be accessed through this platform. And the next platform I want to talk about concerns investment funds and pension funds. We have another platform, okay, which I will start to show you for these institutional investors. The Turkey Electronic Fund Trading Platform and the Turkey Electronic Pension Fund Trading Platform. These offer data on institutional investors such as portfolio composition, performance, and also enables comparisons between funds. Fund units may also be purchased through the platform. Some fund units may be purchased through these platforms through an order placed at any bank or investment firm where the investor may have an account. And this platform has really been useful for increasing the interest of investors in investment funds. I will also try to show you how this one works. For example, we go to mutual funds. You can see the new platform, right?
Yes, we can.
Okay, great. Okay, fund returns, let's say. We can ask it to make a list based on returns of the funds. Or so it shows the performance for each fund. Or we can ask it to do a comparison between two funds, like so. This is one that I had previously selected, I think. Shows that they have both had incurred losses, but at different levels. You can also look at specific data on funds, such as, let's say, portfolio distribution, portfolio composition. And you can see the percentage of each class of security, how much they invest in stocks, bonds, etc. You can specialize this according to your interest in a specific fund, or you can get an overall view of the market. It's a very easy to use page for all investors. And the final platform is the Real Estate and Developing Financial Instruments Information Systems. This is also operated by the Central Securities Depository, and it provides information on more niche products. Some of these are Sukuk, real estate investment company shares, real estate investment funds, sustainable instruments, and crowdfunding. This is also was involved with the ComSec, OIC ComSec initiative of the Capital Market Regulators Forum. So we also have links to the markets of other ComSec members here. And let's say for real estate base, we can check out information on particular sukuk. Okay, so moving on to financial literacy. Of course, we try to provide investors with information, but this information can be complex and they cannot be adequately assessed by investors. So we try to empower them with also education so that they understand what they need, the extent of the risks they are able to take. Excuse me. The platform with the widest outreach is the financial literacy platform. Any investors can access this platform, and it offers video material on budgeting, banking, loans, investment, securities exchange, and crypto assets. Also, the CMB concludes training protocols with government agencies and NGOs, and based on these, more tailored events are organized for specific target investor groups like women or young people or maybe occupational groups. Physical events are organized for tailored to these groups. And in these events, mostly we try to emphasize the risks of investing in terms of the fraud they may encounter, possible digital fraud, risks of acting upon tips on social media. These are some of the issues that are shared to potential investors. And we also participate in the international activities, IOSCO World Investor Week event and the OECD Smart Money Week events, in cooperation with other market institutions to provide information. And we have outreach activities for children and youth, like we have some contests to raise awareness among students. Also seminars for university students, and we've started to conduct this year some financial literacy classes in schools, and I believe this will be expanded in the coming years. But it's a big initiative because you have to have your textbooks and trained teachers that will educate students all over Turkey. But this is also something that's being worked on. I personally believe it's key to introduce people at a young age to financial concepts. And in this day and age, I think we should also move towards using more social media, more apps, so that we can reach especially the younger demographic. And
Thanks,
finally,
Go. Yeah, go ahead, Go. We're 10 minutes behind, just letting you know.
Oh, we are. Okay. I will wrap up very quickly.
Yeah.
So I've already said all the considerations about protection or inclusion. It's a challenge faced by regulators, but investor behavior also changes. For example, I want to give the example of the pandemic period. In Turkey, we had 1 million equity investors, but within the 2 years during the pandemic, this number increased to 8 million all of a sudden, and then it fell back to 6 million. What I take from this is that in an economy where there is macroeconomic uncertainty and other uncertainties, investors tend to seek short-term profits from the securities markets. They don't take it. They don't move toward long-term investments. Or rather, they can't because of all the uncertainties, and this makes them a little vulnerable toward all the tips and the fraudulent activities when they want to make money quick. This is a pitfall. Also, the investment habits vary according to age. Studies show that young people, Gen Z, is starting investment at an earlier age, and they have a much shorter investment term, and they are more interested in crypto assets and NFTs. So we also have to adjust and adapt to changes in these investor behavior. So it's all a challenge for policymakers, and we try to reach the right balance between investor protection, financial inclusion. Sometimes we impose limitations that amount to protecting investors from themselves, but this can also be necessary at sometimes. I want to thank IOSCO and the Asia Pacific Hub for the opportunity, and I thank you all for your attention. And I'm sorry for taking up too much time. Thank you.
So our next speaker is Dr. Wang Hui-Ching. She's the Executive Director of Digital Strategy and Innovation at the Securities Commission Malaysia. Dr. Wang will share Malaysia's experience in translating financial inclusion objectives into implementation, including the role of fintech, enabling the infrastructure, and lessons arising from the development of equity crowdfunding and P2P lending financing frameworks. Dr. Wang, over to you.
Thanks, Eileen. If I could have the slides up. Excellent. Thank you. I would just like to thank all the speakers before me. And I'd like to start by saying I resonate with Gul earlier. I think it's a modern day regulatory challenge to balance how we look at protecting investors vis-a-vis developing the market. And as in Malaysia in particular, we have a dual mandate. So our mandate specifically are explicit around market development and looking at market integrity as well as investor protection. So we constantly within the organization have very healthy discussions between the development colleagues and the regulatory colleagues on how we want to go about innovating, especially when we look at financial inclusion, right? Maybe I'll just jump straight in. If we could go to the next slide. Yeah. So as with all implementation, it requires a structured foundation to sort of anchor its execution. And the SC Malaysia has just recently launched our Capital Market Master Plan 4, right, or 2026 to 2030. It's pretty ambitious in the sense that it looks at about growing capital markets to about 1.3 to 1.4 million by 2030, and it has strategic horizons stretching up to 2045. And these four pillars are quite self-explanatory. Vibrancy basically looks at vibrancy of both public and private markets. Pillar 2 is what I'm going to be sharing specifically today. Financial inclusiveness for all Malaysians in both dimensions. We in Malaysia are very particular or very focused. In fact, our Prime Minister is very focused around how we could look at supporting the small, medium enterprises, what we call MSMEs, micro, small, and medium enterprises, right? And we've done some assessment. There's a fair bit of gap in terms of how they can seek financing, and they are, after all, a large part of the economy, about 70 to 80% of our economy. So they are a core segment, and I think Josaphat actually raised it earlier in terms of how capital market can be inclusive also to this segment of the market. So that's what I'm going to be focusing on today. The other aspect, obviously, of the inclusive pillar is the investor side. But I think Ho mentioned a lot of it earlier, so I'm not going to go much into it today. Third will be sustainability goals. It is basically looking at how we can mobilize capital and have facilitative ecosystem that enables sustainable capital formation. Last but not least is about how we look at facilitating cross-border flows and greater integration as Malaysia within the region. Right. So these are broadly our strategic imperatives. And maybe I'll just jump straight then into our inclusive pillar. Next slide. Yeah. So well, the digital agenda, I mean, it's somewhat used as a showcase of how we translate policy to implementation, right? And we've always prided ourselves that we don't go digital for the sake of digital, but rather what purpose. And very often, inclusiveness is high on the agenda when we talk about digital, right? So there are broadly three categories of how we go about our digital or innovation agenda. And they are at the kind of calling three different markets, and there are different stages of growth, right? So like on the far right, or at least on my right, there is the digital asset aspect of things. And that strategic imperative is basically looking at how we onshore digital asset or crypto activities onshore. Right? In the middle column, you have increasing investor participation, and that's very much looking at how we grow the digital or robo-advisory market within Malaysia. Right? And that purpose is basically looking at institutionalizing a way of how we allow more retail investors to participate in the market itself. Right? And digital solutions have proved quite useful, not just in providing access to cheaper automated advisory platforms, but also provide competition to incumbents, which we have seen since then sort of transform their digital capabilities too. So all in all, it's brought about more innovation and digital access to the fund management market. The column on the far left would be perhaps the more mature market within all the digital markets. They focus on what Eileen mentioned earlier, our crowdfunding markets, right? So equity crowdfunding and peer-to-peer, right? If we go to the next slide. So how we go about with our digital capital markets is we take a four-pronged strategy. So first is obviously policy making, right? And policy translate into rules. So that's got to be our first and foremost. That's our bread and butter. But we realized over years that it alone is not enough. So we started building developmental programs alongside it. And I mean, for some of the examples, development programs are like our co-investment program, which I'll talk a bit more later. And we also have ecosystem development programs, which compensates, complement the rest of our activities. So very often these ecosystem development programs extend beyond the capital market. So it touches like other ministries, other development agencies, industry players themselves, or even sector-specific players, right? So these are our ecosystem partners, which we actually develop a group of, and they help us with our agenda on inclusiveness. Third, it's regulatory sandboxes. Everyone's familiar with them. This is our way of basically allowing some of our players to innovate. For example, within our current sandbox mission, we have peer-to-peer financing platforms who are experimenting with blockchain. So these are things that we put within the sandbox and we allow them to test. And once we are comfortable with it, we will establish a regulatory framework around it and we'll let them run within the market. Last but not least is what we call our SC by SC program, right? It stands for Synergistic Collaboration by the Securities Commission. It's very long, but it's become an industry name, SC by SC. It basically is our outreach program with respect to innovation, right? So we have roundtables, we have pilot programs attached to this, and we have a lot of leadership discussions around this as well. So the idea is to bring various aspects of perspectives and help us craft out either policies or have agendas where we educate and bring awareness to certain things within the market. Okay. So if we go to the next slide. Very quickly, what I'm going to focus on is basically the crowdfunding platform. And the reason why we focus on them is because it is part of our funding escalator. So we have our main market, which is a public markets. We also have our private markets in PE and VC. But we find that the crowdfunding platform caters to a different segment altogether, right? The equity crowdfunding actually caters to younger startups all the way up to more established mid-tier companies, right? In particular, companies in sectors like manufacturing and agriculture, we find that they resonate with equity crowdfunding given the longer tenure and the type of structures they can do on that, right? And peer-to-peer financing caters again to young companies with not yet sufficient track record on auditable financials, all the way up to supply chain financing. So we realize that they do cater to a different segment of issuers or companies, can I say, and it complements the rest of the escalator, right? So how do we do it? Maybe I'll just go to the next slide. Okay, so this is a slide that summarizes all of it. We started this journey with our alternative market, both equity as well as debt or peer-to-peer, in 2016. Naturally started with regulations. And as we started with regulations, I have to say our guidelines on recognized markets went through iterative refinements in the early years, right? And that's to take into account that there were many new developments and many discoveries. And I have to say in the first few years, agility and regulatory developments were very key for us. Right? And over the last, 7-8 years, you can see that it has grown significantly. Right? Fundraising grew by about 14 times. Number of issuers grew by 7 times. Average funds raised per issuer 2 times. And it also reflects what I've said earlier. We started off funding startups and even larger companies now are coming to this segment. That's one layer, the regulatory framework. But what we also did was the approach we took in registering the players. We took a more experimental wait and see approach as well. So we registered them on a cohort by cohort basis. So the first cohort was a fair bit curated, right? They each pitched what kind of propositions they would bring to the market, and we allowed selected players to come in, right? We allowed them to grow for a period of time, and we saw how they grew. And then the second cohort, we introduced when we saw that the market was tapering off in terms of growth, right? But what we noticed with the second cohort that came in was they introduced a lot of innovation and create a lot more competition within the market. As a result, we saw significant growth again within this market segment, right? Thereafter, we've opened up registrations. We've kept it open since. And the reality is we've seen niche players come in. So there are players now focusing on larger company segments. We call them mid-tier companies. And there are players that are focusing on Islamic proposition. So we now have a few players that are focused or dedicated around Islamic financing. So that was also another approach that we took, right? Third would be the co-investment structures that I spoke about. We'll touch on in the next slide. Last would be the SCSC Grow program, which involves a lot of advocacy. We realized that even with regulations in registering all these players, the awareness of such alternatives to fundraise was limited around the city area. Right? And we realized that there was a lot of advocacy that needs to be done to educate the broader Malaysian entrepreneurs and investors that, first of all, this is not a scam platform. Second of all, that these are alternatives to banks, right? And why are they alternatives to banks, right? So there was a fair bit of advocacy that needs to happen, and it still needs to happen today. And more importantly, in more underserved sectors like agriculture and to some extent manufacturing, we realized that it required a fair bit of education on the entrepreneur side to have a mindset shift. So it's not about going to a bank getting credit, it's about how you pitch to your investors, right? And what do you put down as material disclosures? So these were also mindset shifts that we had to create with the issuers. So a large part of what we do, it's in a way education, awareness, and sort of bringing exposure to people on the ground. If I could go to the next slide. So this is a co-investment program which we started off with Ministry of Finance. It is basically a passive fund administered by our development arm. We established it in 2019, about 6 years back. And what it does is it takes the grant from the ministry and then it co-invests alongside private investors through the platforms, right? So the platforms are the ones sourcing for investors and sourcing for issuers. They are the ones doing the due diligence, right? And they are the ones ensuring that the deals they bring on top of the platform are deals that will be attractive enough for the investors, right? So they are still technically the front of everything, right? But how the fund comes in is that we co-invest on a specific ratio perspective. We started off with a very, very general scheme. Like, so for every 4 ringgit, we contribute 1 ringgit on a passive basis, right? And during COVID, what we realized was there's a need to ensure that liquidity was still there within the market and entrepreneurs could still get funds to pivot during COVID. And we temporarily moved the allocation ratio to 1 to 2. So for every 2 ringgit that is crowded in from investors, the SC or the MySIF fund actually comes in at 1 ringgit. And we noticed that liquidity did not dry up during COVID. In fact, more issuers came to the table to fundraise. And we realized a lot of them fundraised to pivot into digital and to strategically acquire stock for businesses that were growing during times of COVID. Right? So from there on, we started carving out specific schemes for specific strategic areas. Like food security is important for us. So we gave a very nice allocation 1 to 2. And we wanted our micro, small, medium businesses to also embrace ESG. So we also created a scheme around there. And it's since spun off into another different fund, and that's in collaboration with our Ministry of Trade and Industry, right, for different purposes. And that's, again, to support the government's agenda in building a new industrial master plan, right? So around semiconductors, so on and so forth. And we find that this co-investment fund, it's a very, very effective way of, number one, using grants, because the money recycles, right? So every time the money is invested into a company, especially in peer-to-peer notes where it's short-term in nature, it comes back with principals. And then it gets reinvested back into another company, right? So it has a lot of amplifying factors around that. That's one. Second of all, it becomes very effective in terms of a policy tool. In terms of like what I've said earlier during COVID, the strategic schemes, they've all made a difference at different point of time. So we realized that this tool, it's very strategic in nature in order to help us amplify strategic goals. Right? So this has been quite an anchor. It has not only helped in terms of government coming to us and saying that, oh, we would like to set up more funds in order to support their respective blueprints and agenda, but it's also helped our investors gain access to such opportunities within the market. Yeah. Okay, moving on. I touched on, and this is the last slide, I touched on a little bit about ecosystem and how important that is to us. If you notice, the fund I mentioned earlier is done in collaboration with other ministries, right? So Ministry of Finance, Ministry of Trade Industry. We're having conversations with other ministries within Malaysia as well. So we find that they are very much core to our ecosystem. They are one of the best change agents, might I say, or proponents of how you can use the capital market to serve a particular national agenda, right? So they become part of our ecosystem. And we developed GROW at the start to actually further our agenda on food security and how alternative finance could be great for higher risk segments like agriculture, right? And we worked with the Ministry of Food Security, right? And it slowly started expanding, right? We started a Grow Match program under that, and it was meant to basically look at bringing pipelines of agricultural food security related companies from all different development agencies to venture capital, etc., bring it all together and connect them with investors, right? And we realized that we started building that, there was a lot of partners that would really come to the table. We had the Bioeconomy Development Committee that came to us as well. We have development financial institutions in Malaysia that came to us as well. State agencies started coming to us. Players themselves, like upstream agriculture players and all, came to us. So the reality is the ecosystem started understanding how alternative finance work for them, right? And they could also use the opportunity then to meet investors through our ecosystem. And all in all, it also helped us to better understand how alternative finance works for a particular sector like agriculture and what kind of policies needs to be done. For example, we use this as our feedback forum to develop the food security scheme I mentioned earlier in the co-investment fund. So these are just examples of how the ecosystem matters to us. Yeah. And in short, I mean, that pretty much sums up what we do with respect to alternative finance. But in short, I'd like to just recap to say that one, I think for us in terms of driving policy implementation, it's the overall vision, followed by the regulatory framework, how we approach in terms of testing and learning and refining. I think we do apply a degree of agility to that. And beyond the regulatory ecosystem, things like the co-investment fund, the SC by SC Grow, these are all ecosystem development aspects that we work on as well. And we find that, you know, when you bring all of them together, it sort of achieves the objective in a much better way. Thank you.
Thank you, Dr. Wong. Our final speaker for this second session is Mr. Tariq. Back to Mr. Tariq Ibrahim, but this time he wears the Egypt FRA hat. He is the Technology and Innovation Advisor at the Egypt FRA. So in this capacity, Tariq will share Egypt's experience in framing financial inclusion within broader national strategy, coordinating across stakeholders, and measuring progress and outcomes in practice. Tariq, before I pass it over to you, again, just to ask participants to share your questions in the Q&A box. I think, Hosafat, there is one question for you. Okay, now Tariq, over to you.
Great, thank you. Okay, thank you very much. It was very informative. Thank you from Turkey, Malaysia. Very informative. I think it's helpful. It can help me be a little bit more brief, and maybe by doing a quick comparative analysis of, how things are similar or different in each approach and from the different jurisdictions. But let me start first by building on I'll bring the slide quickly.
Yes, it's up.
Great. Okay. So this is actually a very important part of our strategy was I think it resonates with everybody, with the fintech being an important foundation for market development and for the specific financial inclusion mandates that are proven to be part of the market development, specifically if we are going to be looking at making sure that all different categories of the population are included, the underserved and things like that. So this will need to be taken into consideration as well, and how to leverage fintech and the technology. So very quickly in Egypt, we took both a bottom-up approach as well as a top-down approach. When we talk about bottom-up, we looked at the readiness of the technology infrastructure at a national level, and we recognize that this may be different from one jurisdiction to another. In 2018, when we started this, there was a lot of gaps when it comes to the digital identity and the eKYC platform services being performed remotely, as well as the need for digital registries to compensate for the bookkeeping responsibilities of all the non-banking financial service institutions and things like that, as well as the e-contract, which was also mentioned as well. So we took an approach to make sure that we establish the regulatory foundation for these ingredients, which are going to be common and needed. And at the same time, it was not clearly legal to perform these things remotely without these jurisdictions. So we found this to be important and effective in the overall digital transformation and the digital enablement by making sure we have these if you want to call it microservices available with recognized technology service providers who can offer that via outsourcing agreements with the existing the traditional non-banking financial service institutions. And of course, the complementary approach is looking at the new products. So Malaysia and Turkey showed some of the new mutual funds, ECFs, the crowdfunding, new technologies, new business models at the product level as well as at the activity level. So business models like crowdfunding, intermediary activities like robo-advisory, the importance of having the distributed and decentralized finance infrastructure to support and minimize the cost of the digital identity and the KYC, and to make it easy for the I would say the market participants or the potential investors to come on board to the onboarding process, as well as the innovation in the new products arena through fractional ownership, tokenization, and things like that. So it's the combination of both of these. And of course, we also have, similar to Malaysia, the regulatory sandbox and innovation hub, which is sort of equivalent to the SC by SC, where we get the market participants to state their problems, the technology service providers and the startups, innovative startups, technology service providers to understand the problems and the challenges with the different products and activities, and establish solutions within the regulatory sandbox. So this is all in all is the overall strategy and focused or driven from the fintech or the technology transformation perspective. One of the other things that I would like to share with you is that in Egypt, it is the financial regulatory authority is responsible for the securities industry as well as the non-banking and lending, while the central bank is responsible for the banking services. So there is also an additional effort to sort of collaborate and coordinate with the financial inclusion at the national level. And there has been, this is actually the framework for a projected strategy that has been updated for the next 5 years from 2026 to 2030. And we've identified in this strategy in coordination with the banking regulator and other governmental related entities, 7 specific sub-objectives overarching the financial inclusion, one which makes sure that we are enabling access and effective usage for all financial products and services with equity, quality, appropriate cost for all segments of society. And this was translated into a 10 enablement or enablers, if you want to call it. So if this goes in line with the strategy operational enablement elements, and there's a lot of commonalities between the ones we talked about within the financial inclusion working group findings. So the only addition I would like to bring to the table is the fact that when we looked at these enablers, we wanted to make sure that we understand how to measure them eventually. So we wanted to make sure whether these enablers are supporting the supply side or the demand side or both. So on the supply side, we identified we've identified 10 enablers, key enablers, with 7 of them heavy on the supply side, 2 of them on the demand side, and 1 supported on both sides. This includes some of the things that you will find resonating with the findings in the financial inclusion work group. The legislative and regulatory requires new legislation and regulatory requirements, including the use of fintech and its licensing, the incentives and government support, and Malaysia shows some of these initiatives in practice, innovation use and sandboxes, digital infrastructure that is underlying that its presence enriches and makes it more efficient and effective for the non-banking finance, including investment, to be performed. The financial infrastructure at market infrastructure level, including the credit bureaus and the ID systems, sustainable financing through the VCs and the guarantees and the programs, public-private partnerships, and as well as strategic partnerships within the academic sector and the civil societies to make sure that, of course, the education and things like that is working. On the demand side, of course, the capacity building, both at the regulator as well as the market professionals and the communication and trust towards the end user or the investor, the potential investor, and making sure they understand, how they can benefit from it. How can investment be complementary to savings and successful savings and through real world cases. And of course, it's very important to wrap up with the fact that in order for this to be properly executed, we needed to have KPIs. We've identified 37 KPI that we needed to be collecting and compensate for this, if you want to call it, the data gathering gap that exists. And we encourage all the participants to help in the reporting and the collection and the aggregation of this data, so it can help us clearly identify what is really working, what is effective, what is driving the needle, and executing on the financial inclusion deliverables. So I just wanted to be very brief and try to, compensate for the time and make sure that we're on board. So I would like to take any questions, and thank you very much.
Thank you very much, Tariq. Yes, if you do have any questions for Tariq and his insightful presentation, please feel free to put that in the chat box. So thank you to all three speakers. So really, I would like to just move on and look at, we're delighted to have Ms. Nadia Hasveld, the Digital Financial Regulatory Specialist at the Financial Innovation for Impact FII and Research Affiliate at the Cambridge Centre for Alternative Finance. So drawing on comparative international research and practical regulatory experience, Nadia will offer some cross-cutting reflections on how access to capital markets is expanding, the regulatory questions emerging across jurisdictions, and what regulators should prioritize early. Nadia, over to you.
Thanks, Eileen. Thanks so much. Hi, everyone. Good morning, good evening to everyone. Can I just, before I start, can I check if my slides are visible?
Yes,
Do you
it
see
is
my?
perfect.
Okay, great. You never know. Great. Okay, so before I start, let me just say a quick thank you to the IOSCO Asia Pacific Hub for the very interesting webinar, and also to the panelists for the very interesting presentations. So as Eileen already mentioned, I'll be talking about financial inclusion and capital markets, looking specifically at the drivers of increased access, risks, as well as possible responses. Before I dive in though, let me just say a very quick word about FI, the organization that I work for. So FI is spun out of the CCAF, Cambridge Centre for Alternative Finance. It's very much focused on narrowing the innovation delta between public authorities and industry to build more resilient, inclusive, and trusted financial systems. We do so through research, capacity building, and policy and advisory support. And we also have ongoing technical assistance programs with regulators across the world, especially in EMDEs, to help them with their regulatory frameworks. Relevant to this webinar also is our Women's Regulatory Network, through which we focus on reducing discriminatory gaps and drive gender intentional policy design. Very happy to elaborate on that offline. Right, so let's dive in. Let's talk about the drivers first. So if you look at the drivers, you can really categorize them into two types, supply as well as demand. And if you look at the supply, you really have three main ones that we have identified, starting with change in infrastructure. Think digital ID, has really reduced KYC friction, as well as initiatives around increasing data portability. Open Finance Brazil is a good example of that. We've also seen a big change in how financial services are provided. So digital platforms, especially, they've really reorganized distribution at mass scale, including, for example, in Asia, where I live, with super apps, but there's also crypto exchanges, etc. To point to an example, Bibit in Indonesia, they're allowing mutual investments from 60 cents. So that's really helping to reach those retail investors. Finally, products. So both new and changes in products. I won't go into everything because we're limited in time, but let me just highlight tokenization and fractionalization as a really important one that has really enabled retail access to assets that have previously really been for wholesale only. And then across these three and impacting all these three sits AI as a cross-cutting capability. And this is really helping firms to reach more customers and create more personalized offers. Then on the demand side, there have also been changes, and especially we've especially seen younger, digitally native populations being more interested and participating more in retail investing world globally, but also, but especially in EMDs. Right, so this all sounds very positive, right? But there are also challenges, and I'd like to stress that if these challenges are not resolved, then this increase in access might not translate fully into an increase in financial inclusion as well. So let me start off with regulatory parameter and accountability. There have been, as I already mentioned, on intermediation and provision of financial services, there are many new players that have entered the market in the space, and many of them are technology providers. And these are not necessarily captured within the regulatory parameter, or if they are, they might not have the same obligations. It's also becoming increasingly unclear who is liable for what when things go wrong, or the options for consumers in those cases. Next, increasingly also we're seeing there are important questions on the use of data and data governance, especially in combination with AI and its increased role and impact. And that then really brings me to conduct and suitability, because the challenges there are also very much connected to the changing technology. So if I take an example, advice, those rules were very much designed, for human advisor, and they don't necessarily work very well if that advice is actually delivered automatically through AI to millions of users. I also, firms are increasingly like to use technology to encourage certain behaviors, for example, through nudges, etc. And these are also not adequately covered in current regulation. Now, this all very much connects to the question how you protect these investors, especially when these are young, when these are investing for the first time, and when they are more vulnerable. So what can regulators focus on? Again, looking at the same issues, but now through a what can we do lens. First, I would say reassess your parameter, make sure that certain firms do not fall through the regulatory cracks, so to speak. It's important also to make sure that accountability frameworks are clear and that there are investor redress mechanisms. BSP in the Philippines is really, I would say, at the forefront of this. They're targeting digital platforms directly through their new circular that they released last week, Circular 1237. Next, data governance. So regulators across the world are looking at how to regulate AI, and I think that in doing so, it is very important to ensure that data protection principles that they apply throughout the life cycle. And Maz's work in Singapore is really a good example of this. Next two priorities on the right are all about, adapting frameworks to ensure that consumers are sufficiently protected. For example, applying conduct rules to new products, making sure that the boundaries between advice and information is clear. I mentioned before that many new investors come from a mobile-first environment, so financial education is also key, and OJK in Indonesia has been doing some important work in this respect on financial education. Right. So I'll just leave you with some final thoughts connected to all of this, which is one, there is a tension between regulatory capacity and technological pace. That's always been the case. I used to be a regulator at TFCA, so I know about this. But I think this innovation delta is only increasing, especially with emerging technology, especially with AI. Subtech investment, public and private collaboration can be key in trying to bridge this. And then finally, I think we should acknowledge that these challenges are increasingly cross-sectoral and cross-border. So the response should be too. And I think especially with the cross-border element, there might be a role for IOSCO there. So I'll leave you with that thought. Thank you so much.
Thank you so much to Nadia, as well as to Tariq, Dr. Wong, and Go, and Hosafat for your insights today. So we've really had valuable perspectives from all the different jurisdictions and institutions, each offering a different lens on the same challenge. So on behalf of the IOSCO Asia Pacific Hub, firstly, I want to apologize for the 20-minute extension, but I hope you appreciate the breadth and depth of the content today. I'd like to thank all speakers and participants again for joining us today. We hope the discussion has provided useful insights, practical ideas that you can take back to your own jurisdictions. So before I close, may I kindly invite and ask participants to complete a post-webinar questionnaire by scanning the QR code. It's only a minute. I think it's more important, not about rating the webinar, but it's more how can the hub facilitate or provide more meaningful capacity building programs for you. So thank you again, and we look forward to welcoming you to future hub events.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.